there is some more downside to the markets, and that is certainly a risk worth paying attention to because we are in a corrective cycle. But on a very short-term basis, markets are very oversold here on multiple levels. Here's what you need to know before the bell this morning. Markets are probably going to bounce this week. And as we pointed out in the newsletter this last weekend, on a couple of different bases, the markets are now very oversold. Again, and we'd spoken about the fact that we had declining momentum previously. That had triggered a sell signal in the markets. We still have that sell signal in place. So upside of any rally near term is going to be limited. And so we're potentially going to see a bit of a rally here, probably in the next day or two or three. Markets are set to open up this morning. We'll see how they hold through the day. But again, we should have a bit of a rally here. And that will allow you, if you kind of got caught into this downtrend and you haven't taken any action in your portfolio yet, we were talking over the last 2-3 weeks about use the rally, raise cash, rebalance risk, and those type of things. And that kind of helped prepare for this correction a bit. But if you didn't do anything, hey, it's not too late. Get a bit of a rally here back towards the 50-day moving average. And that's probably going to be a decent exit point if you need to reduce some risk a bit. Now, that doesn't mean sell everything, right? It means, just rebalance overweight positions, check, see stocks in your portfolio that aren't performing well. Maybe it's time to let those go. Those type of things. Just do some basic kind of gardening, pruning and weeding in your portfolio, and you'll be fine here. But again, we've had this, we broke through on Thursday, we kind of broke through the 50-day moving average. Now, as we've talked about before, one of the things about breaks of moving averages is that a lot of times you'll get a break and then a retest and a failure the next day, and then that kind of confirms that the break was valid. Well, that happened on Friday. On Friday morning, we actually tried to break back above the 50-day at the open and immediately gave that up and sold off for the rest of the day. Pretty decent sell-off into the end of the day on Friday, challenging the 100-day moving average. So there's decent support right here at the 100-day moving average that kind of goes back to this bottom that we had set in the initial sell-off back in really kind of late July, early August. So there's a bit of support here right above the 100-day moving average. Below that, it gets pretty tenuous. If we break through that 100-day moving average, we're going to retest these lows of August, which is also where the 200-day moving average is now. So there is some more downside to the markets, and that is certainly a risk worth paying attention to because we are in a corrective cycle. But on a very short-term basis, markets are very oversold here on multiple levels. So again, a bit of a reflexive rally takes you back to the 50-day. Good place to try to reduce some risk, rebalance portfolios a bit, just to hedge in case that this correction continues going into kind of the election. Now, a couple of things about seasonality. September tends to be a weak month. Well, we've already started off on the weak side for September, so it's living up true to name. October tends to be where markets bottom historically. So if you think about the crash of '87, a lot of these bigger downturns in markets, they bottomed in October. And there's a few reasons for why markets tend to bottom in October. So if you have this correction that begins in September and carries into October heading into the election, which that would seasonally kind of be normal for a presidential election, as we've talked about before, markets tend to de-risk going into the election. Well, we've certainly started that process here, as we've talked about. Now, the issue is that once there's a firming in the polls and it looks like Wall Street can kind of get a handle on who's probably going to win the election, we'll probably start to see the markets firm up a bit post the election. Then that's going to get a lot better. A couple of other factors kind of weighing on markets right now. As of Thursday, the share buybacks, corporate share buybacks are going back into blackout now. So every day as we get closer to earnings, more and more companies are being blackout from buybacks. That's going to remove one of the buyers from the markets. So that's going to put some more pressure on stocks going into earnings. Now, once we get through earnings, about the third week of October, that window is going to open back up again. So again, heading into November, that's going to be a better opportunity potentially for a rally to kind of reform itself going into the end of the year, because you'll have behind us, you'll have the election, we'll have a decent look at earnings for the third quarter, and you'll have buybacks enter back in the window. So just kind of be prepared. This could be a sloppy couple of months, a lot like we saw last summer. 2024 is acting a lot like 2023. A sloppy couple of months, September, October, and then you get that year-end rally once you kind of get a firming of information and context after the election about what policies are going to be, who's won, who controls House, Senate, etc. So just that's what I'm saying. Use a rally here to kind of prepare yourself for some volatility pickup over the next month or so. All right, that's what you need to know before the bell this morning.